kind of go from there. It's like we're still adding a few. Well, good afternoon, good morning, everybody, wherever you guys might be located. My name is Troy Tucker. I'm the CEO of Blue Sky Business Resources. This is a follow-up webinar to one we held previously about how to actually make sure you get your money back on your PPP loan and the requirements, reporting requirements, and all of those good things. We all know the information has been changing on a regular basis. And so we have Chris Badger from Now CFO, who and David Stahl from Hillcrest Bank, and both these gentlemen have been involved in these webinars with us from the beginning. We're very happy to have them with us, and we really appreciate their support of the Elevate conferences and Blue Sky and supporting these webinars. We do want this to be interactive. Please use the Q&A, which is really the best. There is a chat function. I do have both of them open. I will be monitoring them. We will get to your questions. We will get them asked. We did receive some questions in advance of the webinar, and we'll get through those as we can. This webinar is scheduled for an hour. And so with that, Chris, I'd like to turn it over to you and allow you to get us started. And I know that you, Chris, or you and David will be very interactive with the attendees, and I look forward to this. Thank you, Chris.
Awesome. Thank you, Troy. I really appreciate the introduction. And I'm going to share my screen, and we're going to hopefully give you some new content, new information, because it is always changing. The Department of Treasury actually came out with their latest and greatest forgiveness forms last Wednesday, so just 6 days ago. And so it's kind of timely, and I know what's really great is we got one of the best bankers on the line with us. So it's like anytime I'm messed up, I'll just have the banker save the day, because he knows all the good details and has that straight shot back to the SBA. So we've got David Stahl on the line with us. So we're going to try to go through this PPP loan forgiveness. We'll talk a little bit about the forms, talk about the new Flexibility Act. Just remember, so everybody's on the same sheet of music, I am not an attorney. I think I'm a very smart CPA, but I'm not providing tax advice or legal advice as we go through this presentation. I'm just trying to get you out the best information as we know it as of today. And so with that, let's kind of go back and let's take a look at this program that really came into an existence back in March 27th. That was probably the last time that David had a free day or a free weekend, because he's been working nonstop with getting loans out, and realized that I think we still have about $100 billion that can be deployed in the PPP loan program. It has to be approved by the SBA by June 30th, so time is running out, but there is still funds available. But back in March is when it was signed into law. You know, first week of April was the first round of funding, and it took them 10 days and they ran out of money. And after 10 days, Congress had to go back and give them lots more funding. And so that second round of funding was approved, and now we're still in that wave right now. Back on May 15th, we had our first forgiveness form was released by the SBA. You know, 11 exciting pages of instructions, and there's another tax, it looks like another tax return to have to do, okay? Throughout, the Treasury and the SBA has been releasing interim final rules. And then back the latest and greatest in June, President Trump passed signed the Flexibility Act, which it was, I think, I'm trying to remember back, I think the Declaration of War in World War II, I don't think there were any dissenting votes. And so for the Flexibility Act, we had one dissenting vote in the House, none in the Senate. And so you just don't see legislation passed like that. But we'll go over what's included in that Flexibility Act. You know, Treasury and SBA, they've released some more forms last week with a new EZ form. And then just remember, there's money still available. And David, are you still taking applications, or have you slowed that down in the second half here?
We've reopened. Hopefully you can hear me. I'm getting a little feedback. We've reopened the application portal for anyone who hasn't received relief to this point. I think, as you mentioned here, June 5th, there's a series of new documents that need to be completed. And so if reach out to Troy or myself, or Chris, if there's anyone on this call that hasn't received a PPP loan yet. But yeah, we've reopened it.
Good. I think it's a great program. And I'll be honest with you, there are some companies, some of our clients that looked at this back in April, and they're like, man, I don't know, do I need it? You know, they were still working, they still had all their employees. They were just concerned of what was going to happen in the future. You know, we're 2 months later, and, you know, a couple of them have gone back and applied for it because their summer's not stacking up to the way they wanted it to be. And so anyway, if you haven't taken advantage of it, you got a few days left, has to be approved by the SBA by June 30th. But let's go to the last piece that was signed here just in June, the Flexibility Act. And the biggest changes, so before we had 8 weeks to spend money. It was kind of like, man, you got your money, you got your funding, and you're off to the races. You had to have it all spent within eight weeks. Well, now you can take that out to 24 weeks. And so realize a lot of people have asked me the question, well, what if I finish up in 16 weeks? Can I choose 16 weeks? And it's not that way. It's either 8 weeks or 24 weeks, okay? But most of the companies, I think I've only had one client out of about 35 that is going to do the 8 weeks. The rest of them are going to do 24 weeks. That's kind of they're just giving you a lot more time to spend the same amount of money. Another big change that came with this Flexibility Act is in the CARES Act. Remember, the CARES Act is passed by Congress, signed by the president. It's law, right? And then you have the Department of the Treasury and the SBA interpreting what was passed. And the Department of Treasury, in their infinite wisdom, mandated that 75% of the loan funds had to be payroll. So that was not in the original CARES Act, but it was in their interpretation. And that 75% for some companies was great, was no problem. For other companies, it could be very onerous. And so Congress went back, slapped the Department of Treasury's hand and said, let's lower that down to 60%. That way, if we have a capital intensive company, they can spend more on rent or utilities than what the Department of Treasury was actually letting them before with the 75%. So I think that's another good change. I thought it was interesting. They extended the loan term out to 5 years instead of 2. And so the intent of Congress at the beginning was that it was a 10-year loan. So it was a 10-year amortization, or it could be up to 10 years in the wording. And SBA and Department of Treasury came back and said, it's 2 years, which, you know, for a company, if they're going to keep it as a loan, that's a pretty heavy amortization schedule. But they've said they'll do it now for 5 years. And David, I think that was mandated for loans after June 5th. I don't know if you guys, what are you guys doing for all the loans that were done prior for that extended term?
Yeah, right now the guidance that we've been given mandated for after any loans we do after June 5th, before June 5th, it has to be mutually agreed upon between the bank and the borrower. So I don't know what other banks are doing relative to that. but just sort of given some of the moving parts there and how much of the loan would be forgiven. You know, I would envision that it would be a conversation that'll occur between us and the client in determining which is better for them, 2 years, 5 years, et cetera. So,
yeah, I think the 5 years is a good setup, and for companies, they can plan for that. The next thing in the Flexibility Act that they put into place is in the CARES Act, they had this magic June 30th date. And that magic date was the date that everybody would be back to work by, and everybody's headcount would be restored and salary amounts would be restored. And realize that although in Utah, most things are open, and I believe we're in green and yellow phases, which I'm still not very color coordinated. I'm not sure exactly what that means, but green is better. But I've got partners in California and Seattle that are still under extreme lockdown, you know, and so there are obviously places in the country where it is not open back up, and they realize that having that June 30th date, which is now, golly, just around the corner, is not going to be achievable or obtainable by a lot of companies. And so what they did is they pushed that out to December 31st. And so now realize that you've got a forgiveness process that could take well into 2021 before you know everything's forgiven.
Here's kind of a good question, Chris.
Yes.
If you want to use, well, I've got all kinds of questions, by the way. We're going to get to all of them, I promise you guys. If you want to use the 8-week period, but need until the end of the year to restore headcount, do you apply for the forgiveness now with the safe harbor, or do you wait until the end of the year?
You know, it's either 8 weeks or 24 weeks, but the date that look back, that magic date is now December 31st. So you can do the 8 weeks. And I guess you could file for forgiveness, but you would not have you wouldn't be able to do that testing date. And so you're kind of, you're mixing kind of two things up that I don't think you can, because if you're gonna rely on that December 31st testing date, you can't do that in August, right? Because it's not December 31st yet. And so I think you could, but you're also certifying that the information is correct in the forgiveness form. Mm. And if you're using that December 31st date, I don't think you could do that. David, is there any thoughts with that?
I was actually going to say the other challenge that you're going to have too, if I heard the question correctly, is that I don't know if any bank is formally processing forgiveness applications yet. They're accepting them and sort of stationing them, but I don't know if they're processing them, because truthfully, we have not been given the final guidance on how to actually get them through. The other thing, and I'm sure it's in the presentation, one of the documents we're envisioning that will be required is your June 30th 941. So you obviously can't provide that on June 23rd.
Yeah, that's it exactly. It's kind of interesting. The government's been pushing all this stuff out through the SBA to the banks. And remember, the banks are the ones that are going to process the forgiveness form, right? But it's a whole new process that banks have never done before, and they're not set up to do that. And so, you know, there's some things that are going to be, you know, portals and uploads and things like that. But yeah, you know, David's still waiting for the final guidance from the SBA.
Yeah, and I know I have a couple of clients on this call. You know, what we've done is we're keeping our clients apprised of all the latest through email and mass communications. We also sent out a survey last week, I believe it was, gauging our clients' level of interest in terms of, you know, how they were going to seek the forgiveness. Are they going to do the 8 weeks? Are they going to do the 24 weeks? I'm looking for all the things in the email, but there were a couple of things in there just to try to, you know, figure out what's here we go. Are they going to do 8 weeks, 24 weeks? How much of the PPP loan will be utilized? To what percentage do they think they'll hit in terms of the covered period? And just any other, we're gathering questions from our clients too. And so we are trying to make this an engaging process, because unlike where we did a lot of the driving, I think on the application side of this, Chris, this, a lot of the forgiveness stuff is going to be, the banks are going to defer everything, attestations and certifications, all to the borrower. They are putting everything on the borrower to do the calculations. And so I don't know how hands-on the banks are going to be in terms of helping them, but that's one thing we're working through. And once we get the final guidance from the bank or on how we will apply for those, we can probably then be a little more, transparent on the role that we'll play in there. So,
yeah, I think it's just a matter of, over the next few weeks to the next month, things are going to get set up and gelled. The last act, which was the Flexibility Act that was passed on June 5th, I haven't seen anything else that's in Congress or the Senate that's really at a stage where it's going to pass quickly. And so it seems like everything's kind of settled. Now they need to come up with the rules and regs. They had the new forms that came out last week. There's still the guidance for the banks and lending institutions. And so over the next few weeks, over the next few months, I think things will get set. But it's also, if you're going to file or do your forgiveness form and you're going to use the 8-week period, but you're going to use the 8-week period and your December 31st testing date, I think you have to wait until December 31st, because you won't know till that date, right? So
this question kind of falls in line with what we're saying, Chris, real quick, and I'll let you keep going.
Sure.
What if you're faced with cutting someone following the 8-week period? Also, if needing to use more than 8 weeks to use full amount, let's say 12 weeks, and have to cut before 24 weeks, is 24 week the cutoff to determine the amount of staff retained?
Yes. So let's do the first one. So if 8 weeks, if you need it up to 12 weeks, it's a choice. You either elect 8 weeks or you elect 24 weeks. You don't get to elect 12. And if you use up your money after 12, but then you have to lay off people, you're going to be taking your average full-time employee equivalent for the 24 weeks. And so your forgiveness amount could be dinged quite a bit. It's giving you more time to spend the money, but it also extends your covered period, which is where you're going to calculate your full-time employee equivalent and any salary reduction, which could be reductions of your forgiveness amount. So yeah, and every company is going to be a little bit different. That's why I did have one client that had a very large PPP loan. They're about $3.5 million, and they actually squeezed in. Last week they ended up, I think it was around June 10th, finished up their 8-week period, and they did a bonus payroll for their people that had stuck with them. Mm-hmm. And they said, we're just going to do it in 8 weeks, and we'll pass all the testing and file it that way.
Because otherwise you're forced to contend with the 24 weeks.
Yep. You're going to be forced to deal with the 24-week covered period.
Okay. Thank you.
Another thing that's pretty neat with the Flexibility Act is you can defer your payroll taxes. So previously, once you had a PPP loan forgiven, then you had to stop any deferral of payroll taxes. And so for companies that want to take advantage of that, I would say defer it, because you've got an interest-free loan for the next 2 years. And so you're going to defer your 2020 payroll taxes, your federal payroll taxes, for 2020. Half will be due at the end of 2021, and half will be due at the end of 2022. And so that's an interest-free loan. Take advantage of it. And now it's specifically in the Flexibility Act that you can have a loan forgiven in the PPP process and have that payroll tax payment deferral. Okay. Now, a couple of things to keep in mind is they're giving you a couple of outs with that December 31st period. So if you have PPP money and you're not able to restore your employment levels, either because you couldn't find the people, okay, but you've made a good faith effort, or you can't restore the business activities due to health requirements. So either mandatory shutdowns or other things. So think of a restaurant that is still not able to do dine-in service. So in a lot of places in the country, they still don't have dine-in, but your covered period has already started running. You're not going to be able to restore the business activities. Congress is kind of giving you an out with that. And with that, you can still get forgiveness, and you have that out because you're not able to restore your business due to the health requirements that are mandated in the states where you're at. So think of it, it's either from the CDC orders or county Department of Health or state departments or local state shutdowns. Those have an impact on your business. And Congress recognized this, and they've given you an out to get your forgiveness.
Because somebody asked if they counted a worker as an employee, but she has a contractor 1099, can she be counted, or will the proceeds paid to her not be forgivable?
No forgiveness for 1099 payments. So, you know, I'm sorry to say we've run across a lot of applications that were, you know, so hurriedly pushed through the system, you know, and I know David didn't make any mistakes in his 4,000 applications that he processed, but a lot of companies provided banks, well, here's our guys, we pay them 1099 every year, we have for the last 5 years, they're my employees, but they're not really legally employees, but they submitted that information to the bank, and, you know, it just got pushed through the system. And so they actually received more money than what they were entitled to. But on the forgiveness part, you know, as David stated, what are they going to be looking at? 941s, your payroll tax filings. And so, David, I don't know if you guys have any remedies for that.
Don't have remedies for that. I was just gonna expand on, you know, I know several circumstances where people came to us because if you remember, original guidance was that 1099 employees would be included.
Yes.
And so depending on when they kind of put their packages together, and you know, there were a couple of instances where we were, you know, other banks were taking too long, or they didn't get the first round of funding, and I can recall several instances where, you know, they applied for a $250,000 loan. As we started to get in and audit the payroll files, we saw that there were 1099s in there. Really, their 250 should be 180. And I know that some of the larger banks that were more automated processes may not have had that level of diligence. And, you know, I know where that example I was giving actually got approved at a large automated process 40 with those 1099 people included in their loan, when their loan should have been about 184. So that will, you know, if you're in those circumstances, your forgiveness will most certainly be impaired unless they do something and further make the forgiveness easier through, you know, for loans under a certain size, which I've been told the lobbying agency for government guaranteed lenders are trying to pursue some of those options to make the process a little bit smoother.
Along those lines, Chris, got a question here from Thomas. I am a covered self-employed worker with a single member LLC. Can I defer paying self-employment tax, or is the deferral only for 941s?
Yeah, those deferral taxes, it's really 941s. If you're paying yourself payroll and you're a single member LLC, that would be 1 in 1,000 most LLCs like that are taking distributions out, and your forgiveness is going to be mandated by what your 2019 Schedule C net income was. And so, but if you're filing, if you're paying yourself payroll and you have a 941 and you have payroll taxes, yes, you can defer those taxes. That's an entity level decision that you can do and take advantage of that.
Thank you, Chris.
Real quick, as we go through, remember, Congress is trying to be, the kindler, gentler Congress in helping businesses through this process. And so one of the things that, as David mentioned, there's a lot of lobbyists that are saying, hey, we should have blanket forgiveness for loans that are under, I've seen 150,000 and I've seen 200,000. And so those lobbying associations, so I've seen that from the National Restaurant Association, the AICPA has also done that, the American Bankers Association. Those are all entities that are lobbying Congress to push for a blanket forgiveness. And remember, it sounds great, but it isn't law, okay? It's right now they may act on it, but it is not out there yet. And at least as far as I can see right now for the summer session, I don't think we'll see anything passed here in the next month or two that's along those lines. But I love that because it now lessens the pain that everybody's got to go through to fill out the forgiveness forms.
Right. Which payroll taxes can be deferred, Chris? Is it just the employer's share of FICA and Medicare?
Yes, federal payroll taxes, Social Security and Medicare.
Okay. Do you have to file anything to defer the payroll taxes?
Most of the payroll providers, so ADP, Paychex, Insperity, PEOs, most of them have just automatically set companies up for it. Okay. If you're filing on your own in the 941s, it's an election you can make when you file your tax returns.
Okay.
Okay. All right. So prior to the Flexibility Act, back on May 15th, the SBA and the Department of Treasury issued their first forgiveness forms, which was really kind of an insight with how the SBA was going to help process the forgiveness. And they came up with an alternate payroll covered period, which was great if we were still in the 8 weeks. For most companies, if they're going to 24 weeks, then the alternate payroll covered period really doesn't impact. The other thing is they talked about paid and incurred. We'll talk a little bit more in depth about that because in the original CARES Act, it was very confusing because it said it had to be paid and incurred during the covered period. Well, it's really paid or incurred during the covered period. And remember, it can be 8 or 24 weeks. They came out and they defined full-time employees. And so I was wrong. I'll admit it. I thought it was going to be 30 hours along with the ACA, the Affordable Health Care Act. I thought it was going to be 30 hours and SBA came back and said, nope, it's a 40-hour week definition for full-time employee. We'll talk a little bit about the simplified version, but 40 hours is the defined full-time employee.
Let me get this question in. So my question is in regards to the PPP Schedule A worksheet. Step 1 is to determine the average salary was reduced by 25% or more. The instructions say to use the average salary for the covered period, which is 8 weeks, and divide by the average salary between January 1st, 2020 and March 31st, 2020. So his example, for an employee with a monthly salary of $6,500, salary from January 1st to March 31st equals $19,500. Salary covered during the period would equal $13,000. 13,000 divided by 19.5 is 0.667, 66%, which is the less of 75% requirement. His question is he misunderstanding the calculation, or is it actually working out that every salary employee is actually going to cut into the loan forgiveness amount?
Yeah, it shouldn't be. Let me give you kind of the overall, and then we can go into an example. And then I can talk with them offline and kind of go through, because it can be very technical with the salary reduction amount. And so let's get through this other information, and then we'll go through that salary reduction, because there's two things to keep in mind.
Okay.
So first of all, if they're an hourly employee, and you kept their pay rate the same, then there's no reduction. So if you have a salaried employee, or excuse me, if you have an hourly employee and their pay rate was $15 an hour in January, and it's $15 an hour in your covered period, there's no reduction. There's no salary reduction impact. Okay, so hourly employees, as long as the pay rate is the same. Now, if you would lower that employee from $15 an hour to $10 an hour during the coronavirus, then you would have to do that calculation. So I just want to make sure that people understand our hourly exception. And then for salaried people, it's really, you're going to be testing your covered period, and you're going to compare to the first quarter, and it's 75% of that first quarter, which I know does not actually equal, it's a little bit complicated, but you're going to compare what they made in the covered period to the first quarter. And if you're less than that 75% for the salaried employees, you'd have to make that back up. And so I'll go through that formula, Troy, and I can talk with them offline, because it can be pretty complicated.
Ty, I'll make sure that Chris has your contact information, can get in touch with you.
Okay. Another guidance that came out with those forms is that the owner compensation, so remember that self-employed individual, you're capped at $100,000 per year, but now you're going to take 2.5 months at $100,000, and the maximum forgiveness amount you can receive is $20,833. And what the SBA was trying to do is trying to get back to the loan amount that these individual Schedule C filers were getting. And so in the original forgiveness amounts, they were getting $20,833 as the maximum loan amount, but they could only get $15,385 forgiven. And so for, again, owner employees, self-employed, Schedule C people, they've lined that back up. And so your full loan amount should be forgiven, okay? Matching those up.
Here's a question that's right in line with that, Chris.
Okay.
I am confused as how to fill line 9 about the owner's general partner's compensation. Do we have to insert anything there? If our CEO has a guaranteed payment, we didn't use the funds for his payments, shall we enter 0?
As the owner on the form for the owner employee compensation?
Yeah, I think that's what they're talking about.
If it's not part of your forgiveness amount that you're asking for forgiveness, then it's not included.
Okay.
If they received payroll and it's part of the amount that you're asking for forgiveness, then you would include it on that line. Because what they're looking at is the maximum for an owner is this $100,000 capped out.
Okay.
And so anyway, so if they're receiving payroll and it's part of the forgiveness amount that they're asking for, include it on that line. If it's not, then don't include it.
Okay, thank you.
Okay. All right. The other thing to keep in mind, remember, you can do the 8 weeks or the 24 weeks. As an owner, employee, self-employed individual, if you want to do the 8 weeks, guess what? Instead of $20,833, you still get just $15,385. So it was kind of like, why would you do that? But anyway, this maximum amount as an owner employee, do the $20,833. 2.5 months of $100,000 is your maximum. Okay. Another thing to keep in mind, PPP loans, if you're less than 2 million, the SBA came out and said, we're not going to audit you. We're not going to look at it. And then everybody ran out and said, wow, if you got less than 2 million, we're home free, we're scot free. And no, the SBA came back out and said, we're going to look at it. We'll reserve the right to look at everything. And so just realize that the SBA has 90 people for their audit function, which is really a kind of a credit fraud. They're kind of fraud auditors. And so they have 90 people, and they're going to look at $2 million loans and above, which I think there's, at last count was like 26,000. I mean, there's just way more. But just realize that if you're less than 2 million, your chances of being audited, you'd probably have a better chance to win the lotto in Colorado or the lotto up in Idaho, because we can't get it here in Utah. Your chances of winning that would be much greater than being audited. But anyway, they still reserve the right to look at everything.
So laying off employees is allowed after the 8-week period is over, correct? Just want to make sure laying off after 8-week period will not affect forgiveness.
After the 8-week period, if you do the testing and you pass at the end of the 8 weeks, you're good to go.
Cool.
You're going to have to make business decisions, right?
Right.
I've got a couple of clients that are kind of in the same boat. They've kind of ridden the wave with the PPP loan, and they loved it because they were able to keep people employed for 8 weeks. And now they're looking at a long, hot summer with not as much work as what they thought. And they're looking at having to do layoffs in July and August. And so every company is going to have to make their own business decisions. But if you meet the tests after 8 weeks and can file for forgiveness, you're fine. It's not really the intent or the spirit of the legislation, but it's a business decision. And you certainly meet the letter of the law, and you meet the letter of what the forgiveness piece is, because it is for the 8 weeks. Remember, if you're going to elect to do the December 31st, it's a testing on December 31st date that you're going to have to meet. But yeah, there's if you can meet the test and file for forgiveness and then lay off after, you can do that.
I think that's what the airlines are planning on doing, aren't they?
Oh yeah, I know that Delta and Southwest, when you have flights are reduced by 80%, they just can't keep people on payroll.
That's right.
And so yeah, I have a feeling it's going to be a long summer, long year.
Got one rent question here, Chris, if we can just get through it real quick. I know you're not there, but based on timing of actual payments, one was deferred. Can 3 monthly rent payments get squeezed in an 8-week period?
Yes. So we'll get that. Let me get to the next two slides, and we'll talk about incurred and paid, and we'll go through that very example. Because the SBA did release an example where they had 3 payments of a rent payment in 8 weeks. So let's talk briefly about federal and state taxation. So remember, in the CARES Act specifically, the loan forgiveness is not taxable income. But the IRS has come out, and because of all the case law that they had in their IRS notice 2020-32, any expenses that are paid with loan proceeds that are forgiven, you can't use those as deductions on your tax return. So in essence, it's going to be taxable. So that's the way it is today. There is a bill in the Senate. There is a bill in the House that are both in committee. They have not come out of committee. They've been in committee for the last month and a half. Will they ever come out of committee? I don't think this summer. I don't think they'll come out. I don't expect that to be changed till probably late in the year, if it is at all. And so right now, what I've told companies or prospects or clients is plan for it to be taxable. Okay, make sure you plan for that with your tax returns, and that you have the cash to cover the taxes on it. Okay. To this date, I'm not aware of any states that have really come after it. A lot of states are going to follow the federal guidelines for the tax deductions. There are some that are separate. There are some more aggressive states like California and New York that are probably going to go after it. So just realize that that's still out there, and sometime this summer or fall we'll really know. But right now, plan on having to pay tax on it. Remember, one of the biggest changes is the covered period. It's an election. You do the 8 weeks or you can do the 24 weeks. They both start on your funding date. So your funding date is day one of your coverage period, okay? Let's go back to that question, Troy, that you had. So paid or incurred expenses.
Mm-hmm.
And so once you have that covered period starts, okay, if you have payments in that, it's kind of unclear if prepayments are allowed. They specifically said you can't do prepayments of interest, but if you had old rent, so if you had like January or February's rent that you had not paid, and if you pay it during the covered period, that would be eligible for forgiveness. If you have a rent, or if you have a payroll and you pay that, or excuse me, if you have it incurred in the covered period, and if you pay it on the next regularly scheduled payroll date or the next regularly scheduled billing date, you can also include those in your forgiveness amount. Now for 8 weeks, that's a pretty big deal. If you're going to use the 24 weeks, I haven't met any companies yet that aren't going to be able to use up all their expenses in payroll. And so that's a less of a concern if you do the 24-week covered period. But if you have clients or people that are still trying to do the 8 weeks, as long as it's incurred during the 8 weeks and then it's paid on the next scheduled payroll date or the next scheduled billing date, then it'll be included for forgiveness.
On those
Chris,
lines,
Chris, I was just going to say on that calculation there too, just, I think you got to caveat that with, I know there's still 75% to 60% payroll eligibility test applies. So just be cautious there if, on that overarching calculation. So.
absolutely.
Yeah, that's a great point, David. Any of the non-payroll expenses, so if you want to get that extra rent payment in, that's great. But remember, you have to meet at least that 60% threshold, 60%.
Along those lines, Chris, when does the 8-week period begin? Is it with the first pay period begin date after receiving the loan, or the first pay period end date after receiving the loan?
So we'll cover that real quickly in the covered alternative covered period.
Okay.
But generally, it's going to start on the day that you receive funds in your account. So that funding date, that first day, it was originally there was some confusion of, well, is that the SBA funding date or is that the SBA's come out and said that's the date that you have money in your account that you have access to. That starts your covered period. If you're going to elect the alternative covered period and try to do everything in 8 weeks, it will start on the first day, for payroll purposes only, the first day of your next payroll after your funding date.
Okay. Thank you.
All right. As I said before, we've got new forms, came up last week. We've got the regular long form, and you've got the easy form, which what I love is they put the forms up and they didn't put the instructions up with the form. So everybody's like, wow, it's the long form. I've only got 3 pages, but you still got 8 pages of instructions and stuff. So just realize the forms are there. We'll have a link for everybody. But let's talk about the easy form, because that's really the best news that I saw. And it's easy form, and it lowers the time and effort you're going to have to put into it, but you're going to have to meet a couple of tests in order to use that easy form. And so you're going to have to meet one of the 3 tests really quickly. You have to be a self-employed, independent contractor, sole proprietor, Schedule C, with no employees. That's one of the tests. So if you can meet that, you can use the easy form. Second test, you didn't reduce salary or hourly wages of any employee by more than 25% during the covered period, and You did not reduce the number of employees for the average paid hours between January and the covered period, okay? And again, you have those caveats. If you tried to rehire people or they wouldn't come back off of unemployment or you couldn't find them, you get those caveats. So you need to hit 1, 2, or the third test, you didn't reduce any annual salary or hourly wages, and the borrower was unable to operate during the covered period at the same level of business activity as you did before February 15th. So that's really one of the biggest caveats to be able to use the easy form, because if you have companies right now that are in the covered period and they're not able to operate at the same level because of mandated government shutdowns or health concerns or health department shutdowns, then you have this caveat, and you can use this easy form, which is really much easier. Again, you've got the long form, you got the short form. If you can, let's try to use the easy form. That'll be the best, easiest and best. Let's kind of jump in real quick and talk a little bit about the calculations and then the reductions. Those have not changed except for the big caveat, and David's already alluded to that, is that 60-40%. So 60% does have to be payroll. 40% can be used for those other expenses, and we'll go through those other expenses. After you calculate that maximum forgiveness amount, then you have 2 reduction calculations you have to do. So one is a salary reduction, which again, if you have hourly employees and you don't reduce their hourly pay rate, you don't have any salary reduction calculation. And the full-time employee equivalent, the headcount reduction. So once you calculate your maximum amount, you have 2 reductions of that forgiveness calculations that you have to do. And then in between there, you have this safe harbor election. And you know, the safe harbor, again, is December 31st. So if you have everybody restored and everybody back in place by December 31st, then you can have forgiveness.
There's a question along that, Chris.
Yes.
Does the 12/31 date act as the same safe harbor date as the 6/30 date?
Yes.
So if my 24 weeks ends 10/25, will we still meet one of the forgiveness guidelines if we restore headcount by 12/31?
Yes. So that's kind of your caveat. So think of it as in the 8 weeks or the 24 weeks, you're not able to restore everybody, but you can by December 31st, and that's your safe harbor. That's what's going to get you in and get you into forgiveness.
In regards to other expenses, this is a rent. And I know we've answered this before, Chris, but I want to make sure that I'm answering it correctly. Has there been any definitive guidance on whether or not rent paid from an S Corp to an LLC that has common ownership will be forgivable?
Let's talk real briefly about that. So no guidance yet for those type of transactions, which are kind of family transactions. As I will caveat it, as long as there's a lease agreement in place and payments were made before the covered period and they're paid during the covered period, then yes, those can be forgiven, even though they're through going to an LLC or S Corp that has the same ownership, as long as you have a lease agreement and those are payments been made before. We had one client that they had a closely related, the owner basically owned the building, and he'd had a lease agreement put in place, but really starting back in 2019, actually end of 2018 and into the first part of 2019, they quit paying rent because the company couldn't afford paying rent. And so even though, and because it was closely held, he didn't evict him. He didn't evict himself. But when we looked at that, I told him we wouldn't be comfortable in putting that in there because you really you hadn't been paying that, and did you really have an agreement? But if you have an agreement and you've been making those payments, then yes, go ahead and include those for your forgiveness.
Yes.
So remember, your payroll costs 60%, that's your payroll bucket. And then interest, rent, and utilities can be up to 40%. And remember, your interest and rent can be for real property or personal property, so equipment and stuff. Just remember, those are the buckets. With the Flexibility Act, there's been no changes in the definitions. You still have all the same eligible payroll costs. And remember, it's payroll, has to go through. I like it, David. What was your magic form that everybody, all the banks are waiting for? Payroll tax returns, your 941s. And again, they can also, you can choose the covered period. And then let's talk briefly about the non-payroll costs. And then Troy, we can kind of open it up for questions. So remember, it's interest on real property or personal property, interest only, not the principal payments. Rent for personal or real property, and you have to have a rent agreement in place prior to February 15th. Because I had another client come to me, he owned the building and they had never set up another rent agreement. And he goes, can I start paying myself rent and have it forgiven? And it's like, no, you had to have an agreement in place prior to February 15th. Utility expenses, okay. Electricity, gas, water, transportation, telephone, or internet. They have to be for contracts prior to February 15th, okay? If you have a utility that is not electricity, gas, water, transportation, telephone, or internet, it does not count, okay? Has to be one of
Special
those.
documentation requirements, Chris? Does that vary
Yes.
by the vendor?
Yeah, so what I would do, what I've told clients is for utilities, make a copy of your December bill. Show that you had this in place prior to February 15th. If you have a copy of the original contract or the original agreement, you can go ahead and do that. But, you know, I have companies that have been paying electric bills for 10 years. And so you just need to show that you have it prior to February 15th. And so I've told clients to use your December bill as proof. So, and if you have the agreement, you can use that. That's the documentation that's going to be required. All right, throw those all in together. You get into your step one, which is your maximum amount. So payroll, and then interest, rent, and utilities. Interest, rent, and utilities. That's what's going to show up on your 3508, your forgiveness form. You know, lines 1, 2, 3, and 4, you've already got done. And if you're going to use the easy form, you'll include that. Lines 1, 2, 3, and 4. All right, let's remember that safe harbor testing goes out to December 31st. And so that's the magic testing date. If you can meet those requirements, you won't have any reductions. Otherwise, you're going to have to go through all the paperwork and reduce versus via your salary reduction calculation in step 2 and your full-time employee equivalent reduction in step 3, okay? So all those steps have stayed the same. Remember though, now you have a 60-40 split and you have that safe harbor testing that you can look at the end of the year on December 31st. So we've got a lot more material, but let's go ahead, Troy, and let's kind of take questions and kind of figure out how we can help people get through this forgiveness process as we get set up.
This is going to go back to the, you spoke of SBA looking at quarterly 941s. I have a small business with very few employees. Normally, for cash flow reasons, just at year end, I process myself a large single payroll, cash pay the taxes, and based on the cash flow profits, take combo of cash and loan payable to owner. For PPP, processed 100K per year payroll for me with the rest of the team for the 8-week period, but want to stop my personal cash pay to conserve cash before full quarters 941. Is SBA averaging full quarters 941 payroll, or will they look to actual 8 weeks payroll?
So specifically in the forgiveness forms, they're asking for those payroll tax returns as backup. And that's one of the things that, David can weigh in on the bank's perspective, but that's one of the things with having that tax return that shows that you filed that to the government and the bank's going to accept that. So if you haven't filed that, or if you're going to try to file a 940 at the end of the year, I think it's going to impact how they look at your forgiveness, because now you're going to have to look at it more because you don't have exactly what they're looking for.
Yeah, I would say, and I wish I could engage with this person directly, but I would ask them what documents did they provide to get the loan if they don't do quarterly 941s, because I know we were doing 941s and 940 reviews, though we didn't reconcile it. We just kind of looked at the numbers to make sure that their calculations were directionally correct for the 2.5 times monthly payroll calculation. But I know from everything that I'm seeing, the 941s on June 30 is going to be it's going to be critical to sort of substantiating to the SBA the payroll levels where they were prior year versus this year.
Yeah, and Troy, I would look at it as again, having that actual tax return is what lends credibility. We're going through a transaction right now. The company is going to sell, and the buyers want to look at the 2019 tax returns, which they haven't prepared yet. And the buyers go, well, we want to see the tax returns, right? Because when you file that with the government, that shows the validity in those numbers, and then you can accept them at face value.
Okay. Whoever, that was an anonymous question. If you want further information, send me your contact information through chat or quick Q&A, and we'll make sure that somebody gets in touch with you. Our CEO, founder, Soner, always receives a monthly guaranteed payment of $60,000 every month. But we have used all of our 65K PPP loan within 24 weeks with all employees' payroll. Are we to be concerned about anything? We don't understand the owner-employee point. Yeah,
so the SBA specifically in their first set of forms put in that owner-employee, and you have to disclose the payroll amount. And they haven't defined the owner-employee. So if you're a founder, he's probably a majority owner, and I would think that would fit the definition. But as an owner-employee, let's say you're a 5% owner and you only get payroll and you don't have any distributions, are you still liable for that or need to be disclosed on that? And they haven't defined it. If you can use your PPP loan on payroll, then just do that and have it forgiven, and then you don't have to mess with any of the owner compensation stuff, right? Because you're going to show that all of your forgiveness amount ran through payroll. I think that's much cleaner and easier, because remember, as a company, you're going to have to certify that all that information is correct. And then the bank is going to review it and approve it. And I don't think David, you guys aren't planning on auditing any of these, are you?
No, and I know it's nuanced, but we're not approving anything. Yeah, we are literally shifting paper from the company's hands to the SBA hands, and the SBA approves it. The one thing I will touch on from the guarantee payment side of things is I remember you and I did an earlier webinar. I'm losing track of the time, but where I think anything like this was not intended to make sure the owners were, PPP was not intended to make the owners whole in terms of any guaranteed payments or payroll. This was intended to keep staff and salaried people on payroll. So if your owner is collecting a W-2 salary that is captured on the 941s from a quarterly and annual perspective, then I would run that through PPP. But if they're getting payments, distributions, and other things outside of, I would exclude that from any sort of forgiveness calculation.
David, I think that's good advice. And again, as you said, this is the paycheck protection program. It's not the owner's paycheck protection program. And so across the board, if there's anything that you're doing and trying to get forgiveness for, as long as it's for all of the employees and all of the staff are benefiting from, then it's probably good to go. But when you're isolating and only enriching the owners, then it's probably not going to fly. And I like that. So banks are not approving the forgiveness. We're just processing the forms. I love that. Which
we're paper pushers on this one.
Okay.
Awesome. We are at the top of the hour, so just so everybody knows, we will get through the rest of the questions. I'll commit to be here and answer them all, but just so everybody is aware of the time. And then this is just clarifying the last question. The guaranteed payment is not through payroll to the owner, so the 65 or 60 is not guaranteed. It's not through payroll.
Then it would not be part of the forgiveness amount.
This says incurred. So does that mean that 5 biweekly payrolls can be included up to the max per employee?
Yes. So remember, if you're using the 8 weeks, your maximum is 8 weeks of 100,000. It's capped at 100,000. If you're using the 8-week period, you can only do 15,385. Okay. If you use the 24 or the 24 weeks, remember that can go up to 46,134. But most people, remember, you don't get any more money, right? You just get more time to spend the same amount of money.
Okay, unless I'm missing something, why would you choose to use the 8-week versus the 24-week? More time to meet the same amount of spending, right? You just answered that.
Yeah, I can tell you the one company that that wanted to do the 8 weeks and is going to use 8 weeks. They just wanted to be done with it, right? And they had, over $3.5 million. They run weekly payrolls, and so they had everything going out. They were able to meet the full-time employee equivalents and everything. And to be honest with you, they're more worried about the rest of the year, and they wanted to be able to focus on that, and they wanted to put this in the past. And so it's been a great help for them, and it was a huge support for them during this time, because it helped them solidify some great banking relationships. But they wanted to kind of put it in the past and kind of move forward and focus on other things that are going to take up a lot of their management time.
Makes sense. We have a transaction going on, and they're going to do the same thing. They're electing the 8-week period just so he can get through all the money and then have his transaction happen without this being, muddy in the water.
Right.
Here's one that goes along the utilities. If you switch phone and internet providers what if you switch phone and internet providers after February 15th?
Oh, that's a good question.
Did you need the previous statements and then the new statements? Is that what you would do?
Wow, because in essence, you're still getting the same service, but different provider.
Right.
There hasn't been a lot of guidance on it, and I have not seen that specific question answered. I would tell you that if you can show that you've monthly been paying a phone bill, and monthly in January it was AT&T, and in April it was Verizon or whatever, I think that a good faith effort or good faith due diligence, if it's the same, then I would include it, but it may be unincluded. And if you're going to do 24 weeks, just do it all on payroll and don't even mess with the utilities. And so payroll is going to be the easiest way to do that. Otherwise, wow. I mean, because as David said, I love that you're moving the papers, but if it doesn't match up, then that's where, and the thing is too, is I think, David, correct me if I'm wrong, I think you guys have like 60 days to review, and then the SBA has 90 days to review. And so think of it as, even if the bank approves it, if the bank processes your form and sends it to the SBA and they disapprove it because you have a different provider, that's another 5-month long process you'd have to go through. So
Yeah, I was going to say, I think combined it's pretty long. I was just going through the latest that we got last week to see if there was timing on that. If I can find it, I'll come back. But I think your guidance is right in terms of, I mean, it's trying to shift as much of it to payroll and as you can, and other bigger ticket expense items to, just that 60-40 split's probably best. I mean, I don't know how big this person's phone bill is, but I can't imagine that that's going to have a material impact on the forgiveness. Because unless they've laid off a bunch of people, which would be a different situation in terms of the forgiveness calculation. You know what I'm saying?
Absolutely. Right.
David, I think
Here. Yep, you're right, Chris. It says, note the bank has 60 days to process the, to get back to the borrower to suggest it's in compliance with the rules, and the SBA has up to 90 days to remit the payment to the bank.
Yeah. We want to make it, remember with this forgiveness form and the process, because the bank, they are going to look at it as they move the papers across. We want to make it very easy for them and have everything tie out and make it very neat and tidy process. And when it's neat and tidy and everything ties out, it'll be easily processed, because as it goes through that long 5-month long process approval, you don't want it to get kicked back.
Dave, I think this question's for you. Can a borrower who took a loan early apply for a second loan to cover additional expenses to be incurred between now and December 31st?
I think the short answer to that is no. They cannot increase. Wait, let me double check on that. I believe I saw something that suggested they cannot increase their PPP loan. But I'll confirm that here in a second when I find that message. But I'm pretty confident, no, they cannot apply for a second or increase it unless something gets changed, given sort of the spike in infections and confirmed cases, and some of the rhetoric out there now around potentially pulling back on some of the opening.
Okay. I do quarterly 941s. We just wanted to know if I can stop paying myself after end of 8 weeks versus paying out full quarter. Will they average the full quarterly amount?
If you're doing the 8-week covered period, then it's only the average for the 8 weeks. And the 941s are not going to tie in directly. It's just additional backup to show that you actually paid those and you're remitting the taxes for it. And so it's not going to tie out perfectly. And so what you do after the 8 weeks, that's fine. As I said before, every business is going to have to make their own business decisions, and you may or may not want to keep that payroll going.
Okay. I think you just answered this question, Andrew. I think that got you answered, Andrew. If it doesn't, type in again, and we'll get back to it. Here's a thank you. You're welcome. We appreciate you being here. We've got 3 questions left, guys, and 2 in the chat. So we're getting through this one a lot quicker than the last time we did this. Another reason to do the 8 weeks is if you have to reduce before 24 weeks. Am I missing something? If I use 8 weeks, can I not cut into week 16 or 20?
Yeah, that's perfectly, that's a business decision.
Yep.
If you can meet your tests at 8 weeks and get full forgiveness, and then you're forced to do layoffs in week 14, 15, 16, whatever, if you file your forgiveness using the 8-week election, you should be fine.
Right. Echoing last question, using 8-week period, when can I cut without interfering on forgiveness?
After the end of your 56th day. So letter of the law is it's 56 days. First day one is the day that you receive the funding. And so if you do layoffs after that, then, Callie, sorry to say, but that's business. You're going to meet the letter of the law, which is the testing during that 8-week covered period. And so if you're going to use that 8-week covered period to meet your tests, then you're good to go. And if you do something in week 9 or 10 for business purposes, that's after your forgiveness.
Right. That's no different than the company that's going through a transaction process. It's going to cut off after the 8 weeks.
Yeah.
Okay. Here's another one. By using 24 weeks, our payroll alone will already provide a total of $97K in line 10 of Schedule A. And FTE reduction brings the total down to $83K in line 13. Since our PPP loan is $70K, does this mean we're well covered for the full forgiveness and therefore don't even have to document utilities, etc.?
Yeah, so if you use payroll, but remember your maximum payroll, you're going to have to, once you calculate that maximum amount, that's when you use the full-time employee equivalent reduction. And so you still may have a reduced forgiveness amount. So you'll maximize the payroll, right? And you don't have to worry about utilities, and you don't have to have support for all the utilities and all the backup and documentation. You'll just run it all through payroll. But you remember, you do have to look at those two reduction amounts for either the salary reduction or the full-time employee reduction.
Okay. All right. What happens as a self-employed PPP recipient if you have additional expenses for your Schedule C that you didn't include in the PPP application? Are you able to amend your Schedule C after receiving the PPP, since tax filing date was extended until July 15th?
I was going to say, you should have already submitted your Schedule C to the bank in order to get your loan in the first place. After the fact, if you have a difference in the forgiveness amount, it would only increase your forgiveness amount. So the maximum you should have received is the $20,833, and so that should be the maximum forgiveness amount. And so if you're going to amend your Schedule C for last year, you're perfectly legally capable of doing that. I don't think you're going to get any more money, because I don't think you can go back and get additional money through the PPP loan program. And I believe you are, at least some early guidance from the SBA is you can only do one. And so, that can increase your forgiveness amount. And you could certainly try and do it if you've got support for it.
Okay. All right. Patty asks, what if there are two owner employees of an LLC with one part-time employee and one owner is less than 20%, and both owners are on payroll? Is the one owner with less than 20% listed as an employee, and is health insurance for that individual a forgivable expense?
I think they're both going to meet the definition of the owner or employee, because I look at it as if you're greater than 5% owner, then I think you're going to meet an owner employee definition. And just by her verbiage there, I think that person would meet that. And so the other thing you have to take a look at is, for that health insurance, is it for that individual? Is it for that owner, or is it for a company group plan? And so if it's for a group plan, then you're going to be fine. If you're paying his personal health insurance individually, then no. The SBA has given some guidance for those self-employed and single LLC owners that are doing health insurance, then that won't be as part of the forgiveness amount. But hopefully your payroll amount will get you to where you need to be for full forgiveness.
Mm-hmm.
Hey, and Troy, I'm going to come back to that question on the increase.
Yeah.
So what I'm seeing here, this is going to get way in the weeds, but the short answer is one of the interim final rules does allow PPP lenders to increase the PPP loans in certain situations, partnerships, seasonal employees, et cetera. However, if the lender's already submitted a SBA form 1502, or the deadline in which the lender was required to submit that form has passed, the loan can't be increased. So I think a lot of it has to do with timing. But that seems like a really, really, really tight, small window in very special circumstances that we probably have already passed given the date of this interim final ruling.
Okay. If LLC owner/employee on both payroll and K1 used initial guidance and included health insurance as part of the comp and paid it with PPP, is this allowable? Or if not, how can it be corrected now if all funds were already used in an 8-week period?
So think of it. So what you did to get your loan really is irrelevant as part of the forgiveness.
Okay.
And so with the forgiveness piece, specifically think payroll and group health insurance and group retirement benefits. And so if you have individual owners in an LLC that are paying for their health insurance separately, there's been some guidance that won't be included. If it's for a group plan, go ahead and include it.
Okay. So it's like the last question from Patty. On the Easy Forgiveness app, the first page uses the term employee, while the latter instructions refer to FTE. Is an owner employee who is on payroll and was counted as an employee on the original loan app now included on the page 1 Easy Form employee count?
Yes.
Okay.
So as long as they're running through payroll, they'll be included in that payroll head count. And on the first page, what they're trying to do is just, how many total employees are in companies that have received this type of funding. So remember, you're just disclosing your number of employees. And if you're using the long form and you go into Schedule A, then you'll get into your full-time employee headcount calculations.
Great, guys. That is all of our questions. So this has been a very informative presentation. Chris, David, I really appreciate you guys' time again today and all of your thorough research into this and understanding of what's going on as best as you can anyway. It'd be cool if the dartboard wasn't moving all over the place, but it certainly seems to be.
Yeah. With every new announcement or pronouncement from the SBA and the Department of Treasury, it's another day of research that I get to look forward to, and probably more overtime for David processing more loans. And so we just want to thank everybody for joining Blue Sky and Elevate coming out today, and hopefully we answered your questions. If not, give us a call or send us an email. We'll be more than glad to help you out. Now CFO, throughout this time, we've just said we'll help people out, and we do 15-minute free consultations. If it's going to take more than that, then we'll set up an engagement. But for 15 minutes, you've got our time and attention. And so, again, we want to thank everybody for coming out, and have a great rest of your week and hopefully a great summer, right, guys?
Yeah, absolutely. Absolutely. We did have just one more show up. I'm going to get it in here because we're both right here. To clarify about my Schedule C amendment question, if I forgot to include some of my expenses on the Schedule C that I submitted to receive the PPP, such as utilities, office, etc., and my 2019 net income actually turned out to be lower than it was when I applied, what do I do?
So if you amend, you'll actually have lower forgiveness.
Okay.
Again, it's what's right. So if that's correct and you're amending your tax return and you're going to include expenses that you didn't include previously, As long as those utilities were in the company name, then you can try to have those included in your forgiveness form. So, questions come up of, if I have a home office, do I get to deduct home interest or my internet bill at home? And what I've told companies is, as long as those bills are in the business name, then go ahead and include them on the forgiveness. If they're in your personal name, don't include them.
Yeah, for sure. If a business overestimated their payroll costs when applying for their PPP loan, will they have to return the additional funds received if they are all used for payroll within the 24 weeks?
Ooh, that's a good one, because
Yeah.
it's really the forgiveness is, remember, you got two things going on. And David, I'd love to hear what you got with this. The two things is you had the loan amount given out and you maybe got more money than what you were entitled to.
Right.
But now you've spent it on everything that they've asked you to on payroll. I think that your forgiveness form will include all that payroll amount and you would have it all forgiven, because I don't think the bank's going to go back and look at, well, you shouldn't have gotten this much. But I mean, that's a good question, David. I don't know.
I think what's going to matter is step 2 and step 3 of the calculation, in terms of, so it's not just a function of dollar for dollar payroll, it's also the FTE equivalent and such. And so if you got more than you should have, but your FTE or compensation has decreased over the covered period, then it may still, the whole thing wouldn't ultimately be forgiven. And so I think it just would have to be based on how you did your calculation on the front end and whether or not you've actually maintained it or increased it slightly, which some of my borrowers have over the covered period. Like I talked to one guy yesterday and he's like, I blew through my PPP loan in 2 payrolls because we're just so busy right now. So I think it would have to, I think that's where that might get caught or tripped up. But it would just depend on, I'd have to see what that circumstance is,
Yeah. Sure. Listen, guys, once again, I really appreciate everybody's time and answering the questions and getting through this presentation. I'm going to promote a shameless plug. We're having a virtual happy hour next Thursday, not this Thursday, but next Thursday at 4:30, where we can all sit around on Zoom and get to know one another a little better. So I invite you all to come back and share a beverage of your favorite choice with us. And we'll if it gets real big, we'll break up into multiple sessions and you can talk to everybody individually through a Zoom session. So love to see you there. We will be having another webinar the week after next. I'm not sure what that topic is, but please be on the lookout for that. And once again, we appreciate everybody's time and your questions and for participating with us. Everybody have a great rest of your day.
Thank you all.
So.
All right, Chris, good job, man.
All right. Hey, thanks, Troy. Did we set up for this afternoon?
I'm going to text you as soon as I get off of here. I got to go meet Cliff, and then I'll get a hold of you.
Okay, awesome.
Are you going to be in the south part of the valley? Where are you going to be at?
Yeah,